So picture this. It's the middle of the month. You've got about $87 in your checking account, and your car starts making that sound. You know the sound I'm talking about? That grinding, whirring noise that means something expensive is about to happen. You take it to the mechanic, and they tell you it's going to be $450 to fix. Now, here's where it gets interesting. You don't have $450, so you have two choices. Put it on a credit card at 24% interest, or ignore it and hope it doesn't get worse. And here's what actually happens. You ignore it for 3 weeks because you just don't have the money right now. And then one morning, your car just stops. Completely dead. Now, instead of a $450 repair, you're looking at $1,200 and you still don't have the money, so it goes on the credit card anyway. This is what I call the broke tax. And by the end of this video, I'm going to show you the actual math of how being broke makes everything in your life cost significantly more. And more importantly, I'm going to show you the specific steps to break this cycle so you stop paying double for everything. My name is Max, and I spend way too much time thinking about money, how to make it, how to keep it, and how to make it work for me. And I want to help you learn how to make your money work more for you in your life. So let's get started, and please make sure to hit the subscribe button and give this video a thumbs up if this helps you out. The poverty premium. Look, we need to talk about something that nobody really wants to acknowledge. Being broke is expensive, like really expensive. There's actually a term for this in economics. It's called the poverty premium, and it's the extra amount that low-income people pay for the same goods and services that wealthier people get for less. Here's what most people don't realize. If you're living paycheck to paycheck, you are paying more for almost everything compared to someone who has financial cushion. And I'm not talking about a little bit more. I'm talking about 20%, 30%, sometimes even 100% more for the exact same things. Let me break down the math for you, because once you see these numbers, you can't unsee them. The banking tax. Let's start with something basic, your bank account. If you have money, banks actually pay you to keep your money with them through interest. But if you're broke, you pay them. Here's the thing. According to a 2023 bank rate study, the average overdraft fee in the United States is $26.61. Now, you might be thinking, okay, Max, that's annoying, but it's not that bad. But here's where the math gets brutal. The Consumer Financial Protection Bureau found that the median overdraft transaction is just $24. Let me say that again. People are paying $26.61 in fees for a $24 overdraft. That's a 110% fee. If you borrowed $24 from a loan shark and they charged you $26 in interest, you'd call the police. But when a bank does it, that's just Tuesday. Now let's do some real math. The Federal Reserve found that people who frequently overdraft their accounts pay an average of $450 per year in overdraft fees alone. That's $450 that someone with a healthy bank balance never pays. But wait, there's more. If you can't maintain a minimum balance, many banks charge you a monthly maintenance fee, typically around $12 to $15 per month. That's another $144 to $180 per year. Meanwhile, someone with $1,500 in their account, free checking, no fees at all. So right off the bat, just for having the audacity to be broke, you're paying an extra $600 or more per year just to have a bank account. Someone wealthier, they're paying zero and possibly earning interest. The credit trap. This is where it gets really interesting. And this is where the broke tax becomes absolutely devastating. Let's talk about credit cards. If you have good credit and a stable financial situation, you can get a credit card with an interest rate of around 15 to 18%. Not great, but manageable. But if you have bad credit, which you probably have if you've been broke and missed payments, you're looking at 24%, 27%, sometimes 29.99% APR. Now here's the math that should make you angry. Let's say you need to buy a laptop for $1,000. Person A has good credit and gets an 18% APR card. Person B has bad credit and gets a 27% APR card. Both people pay it off over 2 years, making monthly payments. Person A pays a total of $1,197. Person B pays $1,307. Same laptop, $110 more just because they're broke and have bad credit. But here's what really happens in real life. Person A, who has money, probably just buys the laptop outright or pays it off in 2 months. They pay maybe $20 in interest or zero. Person B, they're making minimum payments in that $1,000 laptop. It takes them 5 years to pay off and they end up paying over $1,900 total. Same. Exact. Laptop. But person B, the broke person, paid nearly double. And look, this applies to everything. According to LendingTree's 2024 data, the average American has about $6,380 in credit card debt. At 27% interest, if you're making minimum payments, you'll pay over $10,000 total, and it'll take you over 20 years to pay off. Someone with good credit at 15%, they'll pay about $8,000 total. That's a $2,000 broke tax just on credit card interest. The rent premium. Now you might be thinking, okay, Max, but I can avoid credit cards and I'll just use cash. Fair enough. But you still need somewhere to live, right? Here's the brutal math of renting versus owning. Let's say there's a house that costs $250,000. If you can afford a down payment and get a mortgage, your monthly payment might be around $1,600, including property tax and insurance. After 30 years, you own the house. It's yours. And you've built equity the entire time. But if you're broke and can't save up for a down payment, you rent. And that same house, the landlord is renting it out for $2,200 per month. Over 30 years, you pay $792,000, and at the end, you own nothing. Zero equity. Now look, I know what some of you are thinking. Max, there are benefits to renting, flexibility, no maintenance costs, whatever. And sure, that's true, but here's the thing. Most people aren't renting by choice. They're renting because they can't afford the down payment. According to a 2024 survey by the National Association of Realtors, 36% of renters said the primary reason they don't buy a home is because they can't afford the down payment. So you're paying more every single month. Let's call it an extra $600 in our example, because you don't have $20,000 to $50,000 saved up for a down payment. That's the broke tax on housing. You pay more forever because you couldn't pay more once. The transportation trap. Okay, let's talk about cars because this is where the math gets absolutely wild. If you have good credit and money for a down payment, you can buy a reliable 3-year-old car for about $25,000 with a 6% interest rate. Your monthly payment is around $400, and after 5 years, you own a decent car that should last you several more years. But if you're broke with bad credit, you can't afford a $25,000 car, so you buy a $5,000 car from a buy here, pay here lot. And here's where they get you. They charge you 18 to 24% interest on a car that's already on its last legs. Your payment might be $200 a month, which seems better, right? Wrong. Because that $5,000 car is 12 years old with 150,000 miles on it. Within 2 years, you're going to need $2,000 in repairs, then another $1,500. Then the transmission goes, and it costs more to fix than the car is worth, so now you need another car. Meanwhile, person A is still driving their reliable car that they bought 3 years ago. According to AAA, the average person driving an older, less reliable vehicle spends about $1,200 per year on repairs and maintenance, compared to about $400 per year for a newer vehicle. That's an $800 per year broke tax on transportation alone. And let's not even get started on insurance. A study by the Consumer Federation of America found that people with poor credit pay an average of $1,500 more per year for car insurance than people with excellent credit for the same coverage on the same car. Is that fair? Absolutely not, but it's legal in most states, and it's costing broke people an extra $1,500 every single year. The payday loan nightmare. Look, we also need to talk about payday loans because this is the most predatory form of the broke tax. Here's how it works. You're short on rent. You need $400 to avoid an eviction notice. You don't have it. So you go to a payday lender. They give you $400, and in 2 weeks, when you get paid, you owe them $460. That's $60 in fees for a 2-week loan. Okay, Max, $60 isn't the end of the world. But here's the thing. Let's calculate that as an APR. That $60 fee on a $400 loan for 2 weeks works out to an annual percentage rate of over 390%. 390%. And here's what actually happens in real life. According to the Consumer Financial Protection Bureau, 80% of payday loans are rolled over or renewed within 14 days. Because here's the reality. If you didn't have $400 2 weeks ago, you probably don't have $460 now. So you pay another $60 to extend the loan. The Pew Charitable Trusts found that the average payday loan borrower pays $520 in fees for a $375 loan. Same money that someone with a credit card or savings account could access for basically free, and they're paying $520 in fees. This is the broke tax at its most vicious. And about 12 million Americans use payday loans every year, paying about $9 billion in fees. That's $9 billion that flows from broke people to payday lenders every single year. The actual math. Adding it all up. Let's add up what we've talked about so far because I want you to see the total broke tax that someone might pay in a single year. Banking fees, overdrafts and maintenance, $600. Extra interest on credit cards, $500. Extra rent versus mortgage, $7,200. That's $600 per month. Extra car costs, repairs and insurance, $2,300. Payday loan fees, just 2 loans per year, $400. And that's $11,000 per year. $11,000 that you're paying just because you don't have enough money. Someone with financial stability pays none of these things. Now, here's the really crazy part. If you didn't have to pay that $11,000 broke tax every year, you could save it. And if you saved $11,000 per year for just 5 years and invested it with a modest 7% return, you'd have over $65,000. Do you see how insane this is? The broke tax isn't just making your life harder right now. It's preventing you from ever not being broke. It's a trap specifically designed to keep you exactly where you are. Here's what most people don't realize. The broke tax isn't just financial. There's a massive psychological component that actually makes it harder to escape poverty. Research by Princeton psychologist Eldar Shafir found that financial stress literally reduces cognitive capacity. When you're worried about money constantly, when you're doing mental math about every purchase, when you're stressed about bills, it's the equivalent of losing 13 IQ points. Think about that. Being broke makes you dumber. Not because you are dumb, but because your brain is using so much processing power, worrying about money, that you have less available for everything else. Decision-making, planning, problem-solving. All of it gets worse when you're financially stressed. This is why it's so hard to just budget better or just save money when you're broke. Your brain is literally working against you. You're mentally exhausted from the constant stress. So you make worse decisions, which keeps you broke, which creates more stress. It's a vicious cycle. Breaking the cycle, the actual solution. Okay, so here's where we get to the part you've been waiting for. How do you actually break this cycle? How do you stop paying the broke tax? And look, I'm not going to lie to you and say this is easy, but here's the thing. It is possible, and there are specific steps you can take that will start reducing the broke tax you're paying right now. Step 1, stop the bleeding. The first step is to stop the most expensive parts of the broke tax immediately. Here's what I mean. Switch your bank account right now, today. Close your account with overdraft fees and open an account with a bank or credit union that doesn't charge them. Chime, Ally Bank, and many local credit unions have 0 overdraft fees. This alone could save you $450 per year. That's step 1, and you can do it this week. If you have payday loans, break the cycle. Contact a nonprofit credit counseling service. They're free, and they can help you set up a payment plan or find alternative funding to pay off the payday loan once and for all. Call the National Foundation for Credit Counseling at 1-800-388-2227. Yes, it'll be uncomfortable, but one uncomfortable week is better than paying $520 in fees every few months for years. These 2 steps alone, switching banks and getting rid of payday loans, could save you over $1,000 per year. That's real money that stays in your pocket. Step 2. Build your $500 buffer. Here's the thing that nobody tells you. You don't need $10,000 in emergency savings to break the broke tax. You need $500, just $500. Why $500? Because according to the Federal Reserve, the median unexpected expense that people face is between $400 and $500. If you have $500 in the bank, you can handle most of the financial emergencies that life throws at you without going into debt, without overdrafting, without getting a payday loan. But Max, how am I supposed to save $500 when I'm already broke? Look, I get it. But here's what you do. If you've already stopped the bleeding from step 1, you've freed up maybe $100 per month just from avoiding overdraft and payday loan fees. Take that $100 and put it in a separate savings account. A high-yield savings account if possible. Many online banks offer these with no minimums, and they pay around 4 to 5% interest. In 5 months, you have $500. And here's what happens. That $500 buffer means when your car makes that noise, you can fix it immediately for $450 instead of waiting and paying $1,200 later. You just saved $750 by having $500. That's the inverse of the broke tax. We could call it the not broke discount. Step 3, fix your credit. This one takes longer, but it's crucial. Here's the specific action plan. Get your free credit report from annualcreditreport.com. Check for errors. According to the FTC, about 20% of people have errors on their credit reports. If you find errors, dispute them. This is free, and it can boost your score immediately. If you have collections, negotiate. Here's what most people don't know. Collection agencies buy your debt for pennies on the dollar. A $1,000 debt might have been purchased for $50. They will negotiate with you, call them, and offer to settle for 30 to 50% of what you owe, paid in full. Get it in writing that this settles the debt completely. Start building positive credit history. Get a secured credit card. You put down $200, that becomes your credit limit, and you use it for small purchases and pay it off every month. Capital One and Discover both offer secured cards. After 6 to 12 months of on-time payments, your credit score will start improving. Why does this matter? Because every 50 points your credit score goes up, you save money on everything. Better interest rates on loans, lower insurance premiums, better rental options. A person with a 720 credit score pays thousands less per year than someone with a 620 score for the exact same stuff. Step 4, plan your escape from the rent trap. Look, I know buying a house seems impossible when you're broke. But here's what you need to understand. There are programs specifically designed to help low and moderate income people buy homes. FHA loans require as little as 3.5% down. On a $200,000 house, that's $7,000. Is $7,000 a lot of money when you're broke? Absolutely. But here's the thing. If you're paying $600 extra per month in rent versus what a mortgage would cost, you're throwing away $7,200 per year. So that down payment pays for itself in the first year. USDA loans in rural areas require zero down payment, zero. If you're willing to live in a more rural area, you might be able to buy a house with just closing costs. State and local first-time homebuyer programs often offer down payment assistance. In many states, you can get $5,000 to $15,000 in down payment help. Google your state first-time homebuyer programs and see what's available. I'm not saying you should buy a house tomorrow, but I am saying that you should start researching this now because the rent trap is one of the biggest components of the broke tax. The compound effect. Here's what I want you to understand. Each of these steps saves you money, but the real power is in how they compound and reinforce each other. You stop paying overdraft fees and payday loan fees. That's $100 per month saved. Use that $100 to build your $500 buffer. That buffer prevents you from going into debt when unexpected expenses hit, which means you're not paying high interest charges. As you pay down debt, your credit score improves. As your credit score improves, your insurance gets cheaper. You qualify for better interest rates. As you spend less on insurance and interest, you have more money to save. Do you see how this works? Each improvement makes the next improvement easier. This is the inverse of the broke tax. I call it the wealth snowball. And just like being broke makes everything more expensive, having even a small amount of financial stability makes everything cheaper. Let's do the math one more time, but this time, let's see what happens after you implement these steps for 1 year. Eliminated banking fees, plus $600. Eliminated payday loans, plus $400. Improved credit score saves on insurance, plus $500. $500 buffer prevents one major broke tax expense, plus $750. That's $2,250 in year one. Not the full $11,000, but $2,250 that you're not paying in broke taxes anymore. And in year two, as your credit improves more and you potentially move to a better housing situation, those savings accelerate. Okay, here's what I want you to do right now. Not tomorrow, not next week, right now. First, pause this video and open a new tab. Go to nerdwallet.com or bankrate.com and look up banks and credit unions with no overdraft fees. Find one that works for you. You're going to switch banks this week. Put it on your calendar. This is non-negotiable. Second, calculate your personal broke tax. Go through your bank statements for the last 3 months and add up every overdraft fee, every late fee, every payday loan fee you've paid. Write that number down. Look at it, get angry about it. That's your motivation. Third, commit to building your $500 buffer. I don't care if it takes you 6 months or 12 months. Commit to it. Set up an automatic transfer of whatever you can afford, even if it's just $25 per week, into a separate savings account that you don't touch except for actual emergencies. And here's the thing. I want you to really hear this. You are not going to go from broke to wealthy overnight. Anyone who tells you that is lying to you. But you can go from broke to not constantly paying the broke tax in 6 to 12 months if you're intentional about it. And that difference will change your life. Because here's what happens when you're not constantly stressed about money. You sleep better. You make better decisions. You have more mental energy for your job, your relationships, your goals. You stop living in survival mode and start actually living. The broke tax is real. It's expensive. It's everywhere. And it's designed to keep you exactly where you are. But you are not powerless. You have more control than you think. The steps I've given you in this video, switching banks, building a buffer, fixing your credit, planning your escape from the rent trap, these aren't just financial tips. These are your roadmap out of the broke tax trap. Will it be easy? No. Will it happen overnight? Absolutely not. Will there be setbacks? Definitely. But here's what I know. Every person who has escaped the cycle of being broke and paying double for everything did it the same way. One step at a time, one decision at a time, $1 at a time. And 5 years from now, you're going to be in one of two places. Still paying the broke tax and wondering why you can't get ahead, or looking back at this moment as the turning point when you decided you were done being the person who pays double for everything. The choice is yours. The information is here. The path is clear. All you have to do is take the first step. If this video helped you, please hit that subscribe button and give it a thumbs up. Leave a comment and let me know which broke tax hits you the hardest. I read every comment, and your feedback helps me make better content for you. And remember, you spend your whole life working for money. It's time to make your money start working for you. I'll see you in the next video.